Hi, this is Zak Mir with the Bulletin Board Heroes on Share Talk for Tuesday, the 23rd of October. Starting off with Bezant Resources, where we've had this long candle at the end of a extended falling wedge formation. So hopefully this will have some momentum. Obviously, we need to close above the 50-day moving average and the top of the wedge at 0.37. Initial target, I suppose, the 0.45 to 0.5 resistance area, which has been in place since May, and obviously the stop loss back below 0.3, which is obviously recent lows. Going on to another stock which looks like it's starting to move, coming in the form of Bellzone Mining. False alarm or false dawn there at the end of September, a horrible gap to the downside. Possibility that we're right at the bottom of this falling wedge formation at 0.2. Obviously, stop loss is just below that. Initial target up to the 50-day moving average at 0.44. If you're cautious, you'd be waiting for that to break rather than trying to bottom fish this situation. But there is a bit of bullish divergence in the RSI window to help the stock along. Stock which I've been covering several times in the last month, looking for the elusive end-of-day close above 3 pence and above the 200-day moving average as well. That's the black line there. We're just hanging around that at 3.06 at the moment. The plus point here, I suppose, is the way that the 200-day line is rising, and it could be that we're in a pattern here where the next move will be a golden cross between the 50 and 200-day lines, maybe 2-3 weeks in 2-3 weeks' time. Stop loss at the moment back below the 50-day moving average at 2.71. Taking my life in my hands with Okyo Pharma, which has obviously been one of the most volatile situations around, but it does look as though it's broken out of this falling wedge from the end of August. That's running down to around the 1.6 pence area. So if you're brave enough, you'd be going into this situation around current levels with a stop loss towards 1.5 pence. If you're cautious, you'd wait for an end-of-day close or a weekly close above the 50-day moving average at 2 pence, but it's an early bird situation there at the moment on a technical basis. Salvarx called it higher when it was in the low 40s, and obviously we had the big spike towards £1, looking to repeat a retest of £1 maybe in the next month or so. We've got this sharply rising 50-day moving average at 69 pence, and obviously the 200-day line also rising. So looks as though this is a strong situation on the technical basis. At least while we're above the 50-day line, we could seek out that resistance line there from March heading towards £1, as I said, retesting that August peak. On to stock which I've covered a few times before as well. Velocys, we had the wedge breakout a couple of weeks back now. Still trying to break this 50-day moving average at 6.46, and if you're cautious, you'd be waiting for that really to go before you target the 200-day moving average and post-August resistance around the 10 pence level. Stop loss back below 5 pence in either case. Going on to one of the most talked about stocks at the moment, maybe for last month or the last few months, in fact, Versarien, worth having a technical update here, failed at the 50-day moving average at 160 just last week. We've now had effectively 3 tests of the 200-day moving average rising at £1.10, and the fact that it's still rising means that we are obligated to be biased towards the long side at the moment, at least while there's no end-of-day close back below it. Obviously, the target here would be back towards the 50-day moving average, even if the shares fade from that area. Back below 100 pence would put us back into the bear territory, and that would also break the July support line there. But at the moment, it's still a buy on a dip rather than a sell into strength. Finishing off with a stock which maybe some people had thrown in the towel on, but Zenith Energy looks like it's broken out of this falling wedge from the end of April. A couple of end-of-day, well, at least one end-of-day close above the wedge, and hopefully today an end-of-day close above the 50-day moving average, which would be a big plus for the shares. At this stage, though, given how sharp the downtrend has been here, the most you probably look for here is for the shares to fill the gap up towards 5 pence as a best case scenario. Stop loss back below the top of the wedge there at 3.3 pence. That's it from me, and more updates tomorrow.